if you own residential property in Connecticut and you're over 65, or you're on Social Security disability, or you're a veteran, you might qualify for reduction in your property tax bill. And this could be up to $1,250 for a married couple and $1,000 for a single person if you're either on Social Security disability or you're over 65.
Are you ready for a successful retirement? We're addressing the topics facing today's retirees. Welcome to Retire with Ryan. Now here's your host, Ryan Morrissey.
Welcome back. This week, I'm addressing Connecticut property tax and whether you should appeal your Connecticut property tax. Connecticut property tax, unfortunately, is one of those taxes that we all have to pay. And depending on the town that you live in, roughly every 5 years, towns will go through what is known as a revaluation, where they'll revalue your property and then they'll base the taxes that you pay based off that new revalued property. I've mentioned in some other episodes, I own a few rental properties in some different towns, and I'm starting to receive my letters of the property revaluations. And I will say that some of these have been astronomical. One property that I own in New Haven went up 56% in value. And so it got me thinking of what can be done with this process. So I started looking into it. So that's what I'd like to talk to you about today. So the first thing that you need to understand is what the rules are. And schedules vary, but generally these local governments send these notices out towards the end of the year here. So you want to keep an eye out for that notice and take careful note of the notice, looking to see what your previous property assessment value has been versus your new reassessment. And it's definitely true that real estate prices have gone up in the last 5 years, probably more recently in a couple years. But if you see a very large increase, then it should really trigger some alarm bells that maybe you should start looking into this further. So step number 2 is that you need to do some more work, and you do that by checking your property's property card. And every town has a different vendor that they use for these property cards. Essentially, it's your property record that can be found online. One of the most popular ones in Connecticut is a company called Vision Appraisal. Their website, which I'll put a link in the show notes to, is vgsi.com. And you can find the show notes, by the way, by going to morrisseywealthmanagement.com/podcast and /75. This is episode 75. If you can't find your town on that website, then your next best option would be to go to Google, type in your town and property card to find the link. Let's say you're looking for the town of Cheshire. Type in Cheshire property card, and from there you'll find a link that will take you to where you can put in your name or your address and you can look up your property. If you can't find it that way, you can also go to your town's website and then look under property tax records. You can find out that information. So what you want to look for on there is definitely making sure that information is correct, such as the square footage is accurate, the number of bedrooms, number of bathrooms, and if there are any mistakes, then you want to reach out to your town assessor to correct them. Number 3 is that if everything looks accurate for your information, then you want to start comparing your new assessment versus your neighbor's new assessment. Obviously, you try not to keep up with your neighbors, but in this case, it's a good idea to try to keep up with your neighbors, because if you see that your house is of similar size and conditions and it was built around the same time as your neighbor, but you see that their new assessed value is much lower than yours, then this is something that you might want to appeal. Now, how could that be? Well, if you bought your house recently, if there's online photos of your house, it makes it easier for an assessor to actually assess your property. If there are no photos online of your house, or if the photos that are online are not updated, that is actually can be a good thing, because that means that the assessed value could be lower than what it's currently worth. Now, would have received a notice before this from the assessor's office asking for information on your house. And the more information that you provide, I guess you could say could be to your detriment, because a lot of times if there's updates that you've made, or if there's, you bought your house recently, they're going to use that newer value. Unfortunately, the longer you stay in your home without updates, the lower your property taxes can be. So If you find that your value is much higher than your neighbor's, then that could be a reason to think about going to the next step. If your neighbor's house is very different than yours, you might not need to look up other houses in your area that are a similar size to find something that's a similar size and a similar year built to compare. And step 4 would be at least schedule a phone review with the property revaluation company that did the revaluation. It'll say this right on the letter that you've received. And in my case, it's Vision Appraisal. Right on that letter, there's a web address where I can go and I can request a review. And that will be an initial informal phone review. And I have done one of these in the past, and it did go well because, again, it was a very extreme increase in my property. And right on the phone, they agreed that it was too much and they agreed to a lower valuation. So I didn't go any further and I didn't need to go through with an appeal. So you want to have some information for this phone call, such as looking up some neighbors' properties or other recent sales maybe in your area that are similar size, kind of demonstrating that maybe this number is off. If that doesn't go the way you want, then, or you could even go straight to this, you can skip the phone review, you could go right to the appeals process. And the appeals take place in March in most towns, and you'll need to file an appeal directly with your municipality. If you go right on their website or you go into Google and type like Town of Cheshire Property Tax Appeal, you can find the form that you'll need to fill out. And with that, you'll definitely need to do a good amount of homework similar to what you would have done before, looking at your neighbors' houses, looking at other comparables. If you have a real estate agent who you're friendly with, you might be able to enlist their help to help you find some information. If you have blueprints from recent updates you've done or photographs, any receipts from any work that was done, you want to have this handy. But this can be an overwhelming process because this could be a lot on the line. If, let's say, your property taxes went up $3,000 from one assessment to the next, it could be worth it to hire a professional attorney to help you with this process. Now, everyone's taxes are going to go up over time. That's not why I'm highlighting this episode. We all know that things cost more from year to year, especially recently. Inflation, as measured by Social Security Administration, is 6% increase. But what I'm trying to help you identify is very large increases in your property that are way above normal inflation. Like in my case, I had a 50% increase from assessment 5 years ago. So something like that, you'll want to look further into to see if something can be done. And it depends on how you value your time. If there's not a large cost of doing this and it's been a large increase and you do some research, it might be worth it for you to at least do the phone call, but maybe even file the appeal, because maybe just by going before the board, they're going to be more sympathetic to you. And if you have documentation that proves this increase is unjustified, than if you didn't do this at all. Or you can have an attorney come with you or even represent you if it's something that you don't want to deal with. And once this is all said and done, or if maybe you just decide, you know what, this increase is reasonable, I'm not going to go through this process, then you definitely want to take a look at your final tax bill. So this appraisal and assessment number that you get, that doesn't determine your final taxes. Well, this number will be used to determine your final tax bill that'll come out next spring. And that will be based on the town. Every town sets in Connecticut what's known as their mill rate. And that's essentially the tax rate. Generally, those mill rates don't ever go down. Maybe they'll stay the same, but just like inflation, they keep going up. But there are additional tax breaks and exemptions that you might qualify for. And these are statewide. So what are some of these exemptions? Well, if you own residential property in Connecticut and you're over 65, or you're on Social Security disability, or you're a veteran, you might qualify for reduction in your property tax bill. And this could be up to $1,250 for a married couple and $1,000 for a single person if you're either on Social Security disability or you're over 65. But I will, before I get you too excited with this, I will preface it that this is an income-based credit, and probably for many of the listeners, you won't qualify for this. So to qualify for this, as I said before, over 65 or on Social Security disability, even if you're under 65, you must own property in Connecticut and have tenancy in Connecticut, meaning Connecticut's your resident state. So you must spend 6 months and 1 day in Connecticut. Or if you've done some estate planning and you've gifted your house to your children or to a trust, you just still have to have life use of the property. You don't have to own it. You can own properties in other states in addition to Connecticut and still get this tax credit. But Connecticut has to be your resident state. So if your resident state is Florida, then you wouldn't qualify for this. So the income limit for 2021 are that your income has to be under $37,600 if unmarried or $45,800 if married. And you have to go to your local town every year or every 2 years, depending on the town, and file a form to request this reduction. You can begin filing the form on February 1st, and the deadline is May 15th to file the request for this reduction in your property taxes. You'd have to have turned 65 by the previous calendar year end to be eligible for this. And so you might be asking yourself, well, what counts as income for this determination? Basically, everything that you would think counts as income. Social Security income, pension income, dividend income, capital gains, if you're working. The only things that really don't count, or I should say what also counts too, is tax-free income. If a lot of your income's tax-free bonds, even though you don't pay tax on that, that still gets added back in to determine your income. So mostly everything on your tax return will count as income for this calculation, other than if you take Roth IRA or Roth 401k distributions. Presently, those don't count, and maybe that in future years, they decide to count those. And your local municipality is responsible, as I said before, for administering this credit. So that's who you have to submit a copy of this form and your tax return to them to confirm this. There is a whole packet online that I would suggest you review if you think that you qualify for this. And I'll put a link to this in the show notes again, morrisseywealthmanagement.com/podcast/75. And there's a lot of questions and answers in this guide. I found it very informative. I read through it, but I would suggest you check that out. Additionally, I found from my research that if you are a veteran, you may be eligible for additional property tax exemption or exemption of car tax. And veterans who have 90 days of wartime service, including merchant marines who served during World War II, are eligible for $1,500 exemption of property tax that can be used between property tax and or real estate tax. I'll put a link to where that information can be found in the show notes as well. So hope this has been helpful regarding appealing your 2021 property revaluation. Definitely take a look at that. And if you are over 65 and you think that you might qualify for a reduction in your property tax, make sure that you're taking advantage of that. And it also might be possible too, depending on where your income comes from retirement, to take income from different areas and keep your income underneath that level so you do qualify for this property tax exemption. I'm all about trying to help people save money in retirement, and this could be a way to do that depending on what your income looks like. Thanks for listening, and I look forward to speaking with you next Wednesday. Take care.
You should consult a financial advisor familiar with your specific circumstances before you make any financial decisions. Nothing in this broadcast constitutes a solicitation for the sale or purchase of any securities. Any mention of rates of return are historical or hypothetical in nature and are not a guarantee of future returns. Ryan Morrissey, CFP, is an investment advisor representative of Morrissey Wealth Management, LLC, a registered investment advisor.